And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. And if you've not yet done so, please subscribe to both the YouTube channel and to the podcast. So I'd like to speak about what's been locally in Israel in the news at the end of last week. The rating agency Moody's decided to cut the rating on Israel, lower the rating on Israel's credit. That, of course, caused ripples in the media. And I'd like to sort of focus on maybe why it's not such a big deal. It's not as big a deal as people are making it out to be, and why maybe Moody's got things a little bit wrong, and what you investors maybe should take from this whole thing, because based on the situation currently. First of all, without getting political, much to the chagrin potentially of the mainstream media, nothing really happened in the financial markets as a result of the cut. Believe it or not, nothing happened to the currency. Stock market didn't react negatively. Nothing out of the ordinary. It was just sort of, okay, another bit of news, okay? Remember, Israel's in the middle of a war. Previous to Israel being in the war, Israel was sort of in the middle of a I don't want to call it a civil war, God forbid, but a split nation, let's say, over the judicial reform, which sort of got Moody's on track to do this, but it was certainly the war with Hamas, the potential war in the north with Hezbollah, and the ramifications, right? The budgetary ramifications, the economic ramifications, which is the reason that Moody's decided to cut. Now, I was recently interviewed by two different publications. And they asked me on my outlook for the rest of 2024. And they were shocked when I said that I'm incredibly bullish on Israel in the second half of 2024 and in the first half of 2025. They say, why? Israel's in the middle of a war. It does, there's no end in sight economically. Israel's made it through this war pretty good shape. Okay, so the debt grew, right? The national debt grew, the budget deficit grew. Okay, those things happen, and it's a fact of life, but onward. What I think the big driver is going to be is there is a huge, we saw this during Corona, a huge pent-up demand amongst consumers, right? There are a lot of consumers, right? 300,000 people went into reserve duty. Now, those people are now slowly being released and coming back into the economy. What do I mean by that? They're going back to work. They're going to now be more productive. They've got money to burn that they haven't burned, right? Them and their families, them themselves, them and their friends, right? For 4 months, they haven't spent a penny because they've been fighting, right? Keep in mind the economic impact that that's going to have, when you're talking about, I don't know, 5% of the population suddenly re-entering the world of the economy, right? That's number one. Number two, I saw somewhere where something like 50 or 60 billion shekels are sitting on the sidelines from Israeli consumers that they haven't spent, right? They want to spend. Israelis are notorious to spend, right? They want a vacation. They like the good life, and they haven't done that, right? Nobody's taken a vacation in 4 months. No one. There's nowhere to go. I'm talking locally, I'm talking about domestically. I'm not talking about flying abroad. Domestically, people aren't going out to eat, right? There's sort of a blasé in the nation right now. People aren't, in the mood for entertainment. They're not in the mood to buy things. But ultimately, I think that this is all going to sort of finish up by summer. Sort of all indications are one way or another, there'll be a deal in place and the fighting's going to stop, let's say by the spring, the summer. And then off the economy goes. And because of the pent-up demand, right, what it's going to be is sort of the economic trajectory went like this, and then it's going to go right back up like this. So at the end of the day, it's going to come into the same place. We'll still have, 3-4% growth, because you're going to have, we've had very, very slow or negative growth for the first quarter of the year, let's say, the last quarter of 2023, but you're going to see surging growth starting as soon as the war effort is over. That's number one. Number two, lowering interest rates. Israel already cut one. The Bank of Israel already cut once. They probably should have cut twice, but they didn't do that. But there's no question, I think, that over the course of the year, there will be more interest rate cuts in store for the local economy. That's going to be a boom, right? That's always been a boom for business. That should help sort of juice the economy, number one. Number two, that should juice the local stock market, which gives people more money ultimately, right? Their savings grow. And the biggest issue is the lower interest. There has been a freeze basically in the local real estate market for the better part of a year before the war. Okay, forget about the war for a second. Because of high interest rate, there were very, very few transactions taking place because financing was so expensive. Basically, you had a trickle of foreign buyers coming in and buying, but local young couples, what have you, nobody was buying. Nobody's buying any property. Now, with rates starting to drop, and they will continue to drop going forward, I think that you're going to see a huge spike. Again, it's not today, it's not even February, but summer, fall, winter, a huge spike in real estate transactions. Lots of buying, right? Now, people might be worried about, well, here we go again, right? Is that going to cause inflation? I don't think it's going to cause inflation. I mean, I think inflation reasons were caused by other things, not just because of property prices. It had an impact, but it wasn't the only reason. And the prices have dropped, so we have where to go higher. Now, the one issue is, and I think Israel is taking care of that, a lot of construction projects were stopped dead in their tracks because most of the workers happen to be Palestinians. And because they aren't working right now because of the war, there was a stoppage, but Israel's going to be bringing in a bunch of Indian workers, other foreign workers to come in and get these buildings and other properties and other construction projects up and started, completed. So we're going to start seeing a lot of more completed apartments, and you're going to start seeing a lot of real estate deals also. And throw in that once foreigners can actually, there's more than one airline that's going to actually fly to Israel. I think you're going to also see a lot more foreign, also because the fact is that in whatever country they want to buy from, whether it's the US, whether it's somewhere in Europe, whether it's in Israel, wherever they have their money, the whole world is going to be cutting interest rates. That should help them no matter how they want to finance things, if they want to finance, unless they're all cash buyers. But if they're going to want to finance, they're also going to be buying properties in Israel. So I think real estate is going to sort of lead the way almost. But you have this pent-up demand, which is really going to help the Israeli economy surge. So for all of you, again, past performance is no indication of future results. We know all that. But keep in mind, even for stock market investors locally, the Israeli stock market has really taken it on the chin over the last couple of years. It's way, on a relative basis, way underperformed, the U.S. markets. Well, most of the world has done, but I think it's a little more extreme in Israel. You want to, buy low and sell high. I'm very bullish on Israel going forward. I think that people and Moody's, and here's a warning to you, S&P, Standard & Poor's, and Fitch, if you're thinking about it, you're going to be caught with your pants down because you're going to cut, and then you're going to see in 6 months, all of a sudden, wow, maybe we made a mistake, right? Maybe the economy is starting to click and running on all cylinders, and huge growth rates, and the deficit gets shrunk, and all these things. So take a deep breath, look at the future a little bit, where things are headed, and I think you're going to be a lot more optimistic. So if you want my opinion, Moody's made a big mistake. It might be understandable, may not be understandable, but I think that at the end of the day, they're going to end up having a little bit of egg on their face. And as we see, there's been absolutely zero reaction in both the foreign currency and in the stock market. So I wouldn't get too, local residents might be played up in the media, but it really has been almost a non-issue, okay? What do we say? We're bullish on Israel, very bullish on Israel. That's sort of the summary of this talk. You have been tuning into the Aaron Katzman Show. We speak to you about your money, your life, your money, and your investments. Don't forget about that, right? If you like this content, please hit the like button below. And if you're not yet done so, please subscribe to both the YouTube channel and to the podcast. Thanks so much for tuning in, and we'll speak to you soon.